Gold has been one of the hottest plays of 2026 and of 2027, but today we saw a complete and utter meltdown of the gold trade. And Trump's Fed pick destroys the market run. All right, let's get to it. Thank you for joining me for another episode of All in Society. Please make sure you understand I am not a professional. This is not investing advice. You should always seek a professional before you enter any trade or any investment. And always, always, always do your own research. All right, let's get right to it, y'all. I know it's Friday. I'm sure you want to go out and enjoy yourselves. I'm still stuck at home because the weather is terrible outside here in northern Mississippi. But it is what it is. So I did want to go over the gold trade. We're going to talk about Trump's nomination, Kevin Warsh, for the Fed chair. He's a known guy. He's very respected, has experience with the Fed, but because of his prior engagements and prior conversations, some folks are looking at him as hawkish rather than dovish, and that kind of threw a little bit of uncertainty into the market today. So let's not waste any time. Let's get right to it. Just kind of a brief summary. Today, the market closed out a volatile January, but we were still up. But we are now have this quote risk off tone. Earnings are doing well. Fundamentals are pretty strong still. We have a leadership change at the Federal Reserve upcoming. And then we saw a big crash in those metals trades. Not just gold, but silver fell pretty aggressively today as well. All right, let's get to it. I do all this research, and this is all from Google Gemini. So if anything is incorrect, that's because Gemini is hallucinating. Don't you go blaming me. But let's get right into it. For the most part, it all looks good. I always read over everything. Number one, Trump nominates Kevin Warsh for Fed chair. So Trump officially nominated former Fed Governor Kevin Warsh to succeed Jerome Powell as the next Fed chair. Warsh is viewed by the market as, quote, hawkish, like we said at the top, who may prioritize a stronger dollar and potentially slower rate cuts. And today, I believe the dollar actually shot up today, and the market went lower in tandem with the higher dollar, which is kind of confusing to me. I had a conversation with Gemini today, and while listening to CNBC, I was a little confused because we've been hearing Trump basically berate Powell because he's not cutting rates. So at the end of the day, I don't necessarily believe he would nominate somebody that would be against cutting rates. So I didn't really understand the market response today. Maybe it wasn't really necessarily due to that. I know a lot of people on CNBC and even in here have said so today, but maybe it was just a combination of a lot of things of this gold trade that's unwinding. We talked about that last night. Definitely check out last episode and multiple other things. I don't think we can necessarily look at this nomination as a reason why we had the response on the market that we did today. But nonetheless, how did it impact the market potentially? Treasury yields remain sticky at 4.24%, and the US dollar surged, like we mentioned, putting immediate pressure on growth stocks and commodities. 2, the great gold and silver flash crash. Now, before I get into this, I just kind of wanted to share a story. I'm not typically somebody who bets against the market, but I did enter a put today. And it was a put on gold. I was watching the charts. I've been really diving into the charts more so this year than ever, and really using it to identify momentum in options trades. For me, when I'm investing in options, I typically do leap options. But if I do something shorter term, I typically will do something within no shorter than a month. There are times I might be do like something really shorter than that to play on earnings. That can be hit or miss. But I more so kind of use options almost like a vehicle for long-term investing, but like on steroids, for lack of a better word. So by looking at the charts, I noticed that gold was extremely, extremely, extremely overbought. And I just waited my time and thought I found an opportunity to take advantage when it wasn't yesterday. Yes, it was yesterday morning when gold hit a new high. It was up to like $509. This is a ticker symbol GLD, how I invest in gold. It ran up to 509 bucks. And I saw it that morning, but I was looking at something else and I looked back at it and I just saw this heavy red candle. I said, oh, here we go. So I found the option I was looking for, the put option I was looking for. I executed it. But if you're someone who follows me, I'm very mindful of demand zones and especially supply zones. Real quickly, supply zone essentially where area where you see a lot of selling. There's a lot of shares that are being put back into the market because folks are unloading those shares, and that selling drives the share price down. Whereas demand zone, you see where a share might hit a level and you see this aggressive buying. So it's like a level where consistently people come in and start buying. It could be fundamental reasons, technical reasons, but you can kind of see it on the chart pretty easily that there's these big tick ups and big gaps, and you're seeing the shares move up substantially at a short period of time. And so it's very important to be mindful of those demand zones so you can find the spots where the shares might ride and you can catch that train, that momentum riding higher. Or if you're in a play and you have gains and then suddenly it hits this supply zone or this ceiling, it's kind of like you're jumping up and you hit your head and you fall back down. It's kind of like that. Or think of it like you're playing Sonic, right? And you jump and you hit a spike and then all your coins fall out. So use that analogy as well. So it's kind of like it hit a ceiling and then it sold off aggressively because it was oversold. And it really took off with this combination of Trump's nomination and multiple things like we just discussed earlier. And gold just started falling pretty hard yesterday. It hit the supply zone yesterday. I want to say it was like 470, and I decided not to sell because I was greedy. I only had one contract. Now, if I had multiple contracts, I more than likely would have sold and then held on to the other one and then saw what it did and then made my decision after that. But with only holding one contract, for me, I have to be better at checking those supply zones and identifying them, looking at the chart and see how it responded before. If you see an aggressive sell-off, when it hits those levels, take your money and run. You don't have to hit a home run every single time. You can have a bunch of singles and doubles, and those will get you where you need to be just fine as well. But I didn't, and that thing just went right back up. It went against me, and it headed towards that 509 again. So I got into the trade early that morning. It got to that 470 level, and around that time, I had about $300 in profit or so. And I guess that wasn't enough for me. I kept watching it, and like I said, it went right back higher. That $300 in profit by the end of the day was a $700 loss. Now, I didn't sell the option. I had it out till March. I just waited, and I said, I'm going to sleep on it and see what the reaction is tomorrow. Sure enough, overnight, gold sold off pretty aggressively. At one point, it was down 7%. It opened up right around that level again. I immediately took the profit out. Now, here's the kicker this time. The thing kept running. I probably could have made $500 to $1,000 more if I would have held on to it. But I didn't want to go against myself again, right? It would hit to that level. Again, that morning actually went below that level that I wanted to go to and actually sold for 575 profit instead of that 300. So it worked on me, pat on my back. But if I would have held it longer, I would have had maybe even close to double the profit if I would have held it on a little bit longer. I wouldn't dare hold it over this weekend. I definitely would have sold it by the end of the day because I think it's oversold. But that's my little story. Thank you for being patient and let me tell you that story. Um, I did want to share before we go on. I do have a Patreon community for traders or investors, whether you're a trader, you like to do just like options or just like short term in and outs, or if you're someone who's a long term investor like myself. There's a free version and a paid version. The paid version has a lot of my research and some of the companies that I love and I have high conviction for. And anytime I enter and exit a trade, whether it's long term investing or options trading, I share those trades in real time with you guys. So if you're interested in that, definitely check out the Patreon. But I would love for everybody to subscribe to this page and join the free Patreon. With that being said, let's get to gold and silver, what they call, quote, flash crash. So the parabolic, quote, safe haven run came to a screeching halt today. Gold plummeted over 8% today. At GLD closed down more than 10%, while silver suffered a historic loss of 28%. That's absolutely crazy. So how did this impact the market? Traders were forced into a mass liquidation event following yesterday's margin hikes and the sudden rally in the dollar, wiping out billions in paper gains in a single session. So we talked about this a little bit yesterday. It costs a little bit more for folks who are leveraged on these gold and these silver plays. It costs a little bit more to have those trades. So in order to fund that, people either had to close out of their gold or their silver contracts, or they had to sell something else. Well, what else has been running pretty hot? Tech. Well, what ran not very well yesterday? Tech. Why? Microsoft, amongst other stocks, were selling off pretty aggressively. Microsoft was off 10%. So if you can't go and sell from your tech stocks that are up high, where else are you going to sell from? Well, you're going to sell your gold. And it looked like today there was a little bit of selling of everything. People were selling their gold, and then people were selling their high flying tech stocks, and some of those memory stocks have been going crazy in the past couple weeks. Folks were selling off on those too. So if you're waiting to get in, this might be a great opportunity for you guys to buy, especially gold. I actually bought gold today. My cost basis, because I start a portfolio every year. This is another great reason to get into the Patreon. Every year I break down a portfolio and I start from scratch. And we keep it very small, no more than like 8 of our highest conviction picks, and we invest in those. I like to keep it to like 5 or less, so I can really put in and fund it. And if those high conviction plays run, we make a nice little bag. But every year I start from scratch, and my goal is to beat the S&P 500. And since I've been doing this past couple of years, we've in tracking it, past 2 years, we've beat the S&P 500's performance, not just barely beat it, but we've crushed the S&P 500's performance in that portfolio. So definitely, again, join the Patreon. But my cost basis for this year is right around 405 or so. And I actually bought a little bit more today at the dip at 449.50, I think it was. It did fall a little bit more, and it definitely bounced off of its gold's low today. But I think we're definitely going to ride back up. Trump is always saying some crazy stuff, always seems to be picking fights with other people and other countries and other leaders and stuff. So threatening, action against other regimes and whatnot. So I think gold is going to be a play throughout the rest of the year. But when interest, be mindful of this. If Warsh comes in and he doesn't lower rates, that might go against gold. Gold likes when rates are a little bit cheaper. I'm pretty sure if I have my information right. Sorry. I'm going to double check that and get back to you guys. So just be mindful of that. That's the reason why it happened today. I don't think there's anything fundamentally wrong with the gold trade. It's more likely to head back up, maybe not at a blistering place like it did, but more likely it'll continue to go up. And I think a lot of their tech stocks might take the lead again. And rather than everybody rush into these safe haven picks like gold, you might see a lot of this cash flow back into tech stocks. Who knows? Maybe now people will be sitting with cash on the side and they might decide to wait till NVIDIA earnings, see what happens there. If they have a nice earnings and great guidance, they might throw their money back in NVIDIA and we could see shares above $200 plus again. We do have Google and Amazon reporting next week as well, so be mindful of those. Now, this was crazy. I didn't see this. I wasn't watching too much CNBC today, and I didn't see it reading today. But Amazon is, I guess, planning to invest $50 billion in OpenAI. $50 billion. Absolutely astronomical. The company also confirmed 16,000 corporate job cuts. We talked about that as it pivots aggressively towards AI first infrastructure ahead of its earnings report next week. So how does this impact the market? The stock remained relatively silent, fluctuating near 241 as investors weigh the massive capital commitment against the long-term margin benefits of leaner workforce. That is a very, 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 very big investment. But it's good to see that companies like NVIDIA, Amazon are getting into OpenAI. Because if you invested in those companies and OpenAI does pretty well, maybe if you miss out on the IPO, if you don't get the chance to invest at all, you kind of have like a proxy investment in OpenAI. There's going to be, it's going to be a race where you kind of like one person pulls ahead and they fall back. This is a marathon, not a sprint. And so we're going to see a lot of people change leads. Obviously OpenAI came out and everyone went crazy about that. Meta came out with theirs, but that was kind of lackluster. Anthropic and all these others came out. DeepSeek, you remember DeepSeek and how that crushed the market. And then Google came out recently, and that kind of is the leader right now. So who knows? With this funding for OpenAI, they have the cash to continue their build out, and maybe they release a model here within the next 6 months or so, puts them back in the lead again. So time will tell. Fortune favors the bold and the patient. So let's continue to be patient. All right. And we have one more topic. Wholesale inflation comes in hot, the PPI. So that information was released this morning, I think around 8:30 Eastern. So the PPI, or Producer Price Index, showed U.S. wholesale inflation was hotter than expected last month. Data suggests that the, quote, last mile of inflation is proving difficult to conquer, giving the Fed and nominee, what we talked about, Warsh, more ammunition to keep interest rates steady. How to impact the market? The, quote, higher for longer narrative was reinforced, causing S&P 500 and NASDAQ to slide as session closed. I didn't look at the Russell, but I imagine the Russell had a pretty bad day today as well, because they're going to benefit. A lot of those companies are smaller companies that really benefit from lower rates. So I imagine those fell pretty strong as well. And then Palantir braces for, quote, binary earnings Monday. We talked about Amazon and Google reporting next week. We also get Palantir reporting. With the hardware sector having delivered their numbers, all eyes are now on Palantir, which is slated to report Monday. Options pricing currently suggests a 9% swing in either direction. I'm personally not going to even get close to this. The valuation is like Tesla. I think I made some option plays in it and came out ahead, but it's not something that I'm going to play earnings on. If they have a nice earnings, that's awesome. Maybe it'll bring the tech trade higher again and bring some more confidence to the tech trade. So I'm not messing with it, but if you guys are Palantir investors or believers, more power to you. I'm not betting against you. I'm just me personally, I'm going to stay away from it. All right, I did want to look at how the major indexes performed today. I was looking at the Dow every day, but I'm not really going to focus on that anymore. We're going to focus on SPY, NASDAQ, and we're going to watch gold as well. I know it's not an index, but we're going to keep track of gold as well because I think there's will be opportunity for us to jump in that trade, and we'll ride it up higher again. But the S&P 500 closed down today just under 0.5%, closed at 69.39. To be honest, this is kind of like a little healthy pullback. It seemed like it was a lot worse today, but it wasn't even a 1% drop. So not that bad. And we hit a new all-time high this week. So we're going to get a little bit of pullback. Even if we didn't get everything that we got today, we more than likely would have had a little bit of pullback like we did. Moving further, NASDAQ, pretty much double the decline, almost down 1%, closed at 23,461 today. They just went my light. A lot of the companies that we have in options are getting beat up today. Vertiv Holding was down 4.5%. NVIDIA actually held up strong. It's holding this 190 line really strong. That was a resistance previously. For the fact that we're holding this 190, that bodes well. I really like how NVIDIA is performing. It seems like it's just slowly building up steam. I think a lot of that might be because of China reportedly greenlighting those H200 chips to major companies in China. Meta shares fell back a little bit, about 3% from their massive run, up 10% after earnings. MP Materials got beat up today. There's a lot of mixed information. If you're someone who was invested in MP Materials, hold strong. There was reports that there is not going to be price floor for these rare earths, but MP Materials came out and said that is not true. The report is not factual. They are still under contract for those price floors, and we just need to kind of be long-term investors and let this noise just fizzle out. Hold your MP Materials. Now, if it goes to like $50 or so, then you might have to have a decision, but do your own research. But I'm personally holding on. I had my hard stop at 58.50. It's at 58.77. It did get below 58.50, but it did not close below 58.50. So I did like to see that, even though I was still not selling. Okay. AMD, I still like this. They're reporting next week as well, but it did pull back about 6%. It's been running hot lately, so little pullbacks like this before earnings is not a terrible thing. Last thing you wanted to do is be at a 52-week high that is earnings that has a somewhat decent earnings, and it just falls 10-20% like a company did today. And then Aurora Innovation Inc. Do your research. Check out this company, autonomous trucking company. They create the brains of the autonomous truck. Do your own research. If you like Uber, check out this company. I believe Amazon is also an investor in it as well as Uber. Any other companies? Uber was down 2% today. Apple was actually positive today after earnings report. I thought it might be down after earnings. They had a decent earnings, but they didn't tell a really decent story, give us a lot of information about what is their solution for these high costs for memory for all of their electronics. So that'll be something we'll have to be mindful of, but more than likely Apple's just going to trade flat for some while. Amazon was down 1% today. We talked about gold, GLD down 10%. Netflix actually squeaked out with a little bit of a positive return today. Robinhood is down below $100. For those of you Robinhood fans, DraftKings is really breaking my heart. This thing ran up, and because of some news that came out today, basically can't remember if it's some type of group, CFTC or whoever's in charge of like the regulation for these prediction markets and such. They're kind of throwing out their window that sports betting and prediction markets are not allowed, and a lack of technical terms and everything that it said. And so that kind of was looked as bullish for like a Kalshi that Robinhood is partnered with and Polymarket. But for whatever reason, it was not a good look for DraftKings, even though DraftKings has its own prediction market platform as well. So again, I think this is one of those situations where there's a buy the dip opportunity. I think our average cost is around $30 for DraftKings. I will tell you $35 actually. So I'm well away from my average cost. It's actually down, shares are down 23%, 24%. This is a long-term investment. Mark my words. It might take some time. Mark my words. This is going to be a $40, $50 stock within the next, let's say, max year and a half. That's my bullish call on DraftKings. A lot of folks do not understand this business, and I don't think the prediction markets are that much of a competitor or a threat to your traditional sports books like your DraftKings or FanDuel. In fact, I think these prediction markets are going to be a reason for states that are not regulated for online betting to regulate, because Kalshis and your Polymarkets are now able to enter states that are not actually regulated and allow people to bet on sports or whatever predictions that you want to invest in. Whereas in legalized states, the state is allowed to get tax dollars from that. Whereas in the federal level, in the poly markets and these prediction markets, the states are not. So if you're a state that's holding off like Texas and California, what are you waiting for? It's already in your state. It's in your home. So why would you not profit off of it? This makes no sense. I don't understand how this isn't. I don't live in those states, but I don't understand how this isn't like put on the ballot like yesterday. They should be wanting the tax income. It's already there. I believe even you can invest when you're 18, I think, in some cases. I could be wrong in that, rather than 21. So I think this is just a no-brainer, and that's going to be nothing but a catalyst if the huge states like Texas and California on board online legal betting. That is going to be a huge boost to their bottom line, and that is going to be a catalyst to move shares higher. And I bet you within the next year and a half, we're going to hear something like that for one of those big states, or maybe even some of these other smaller states are going to say, all right, well, let's take the tax dollars if the folks in our states are even allowed to bet and we're not seeing anything from it. And there is one company on this list here that I might be doing a dive into, because there was an article that came out today, and I might be able to make a video for you guys to show you something that you might be able to take advantage of if you are a gamer and you are a fan of Grand Theft Auto, that Grand Theft Auto 6 that's supposed to be coming out this November, barring, knock on wood, no more delays. But that's it for today. I appreciate you guys for watching, for rocking with me. Make sure you like, make sure you share, make sure you subscribe, and make sure you join that Patreon. The link is in the description. Have a safe weekend, and go State, go Michigan State.